So this is a Schinnerer seminar on how to reduce your professional liability exposure, and if you are a CNA insured, getting insurance credit for doing so. I am Frank Musica. My background is years in private practice, AE practice, and many decades here at Schinnerer. With me is Judy Mendoza. She has the unusual, unique perspective of having handled AE claims for decades before we added her to our risk management team of consultants here. She uses her expertise in helping firms head off situations that lead to claims. So what we're going to do is Judy will explain the best practices to help firms protect themselves and reduce their professional liability exposure. Judy?
Thanks, Frank. So these are the 7 best practices that we're going to be discussing today. They've been recommended throughout the design and construction industry for a really long time. And as Frank said, they are designed to assist you and help reduce the frequency and severity of claims, help make claims more defensible, and provide a mechanism to protect your firm's profitability. These 7 best practices were created after discussions with our most successful firms, with our CNA claims specialists, defense attorneys, and other industry resources. So as you notice, the very first one, of course, is written professional service agreements. That one I've put at the top, and it's in the largest box because it is, in our opinion, the single most important element of a good risk management program. So we're going to talk about that one first, and then we're going to look at these 6 additional practices that we believe can result in reduced claims and increased profitability. There we go. Okay, a professional service agreement is your best risk management tool. I can promise you as a former claims person, when someone reported a new claim to me, the very first thing I would ask for is let me see a copy of your contract so I can see what's in that professional service agreement that is going to help us defend you, and conversely, what's in that contract or that agreement that may concern us and may make defending your claim that much more difficult. I can promise you that if we assign an attorney to defend your claims, that's probably going to be the very first thing that the attorney asks for as well, is to see a copy of your professional service agreement. We also get many questions, in being in the risk management department at Schinnerer. People are often calling and asking us practice management questions, and we get questions such as, my client isn't paying me, can I stop providing services now? My client wants my documents, do I have to give them to her? My client wants me to join in an arbitration between him and the contractor. Do I have to agree to that? And what do you think all of these questions really have in common? And the answer is that our answer is typically, what does your professional service agreement say? That is the roadmap to the project, and that's what we look at. So, what are the main purposes of a professional service contract? This isn't going to be a detailed seminar on contracts. We have plenty of those available. But as an overall look, we're going to talk about the fact that this is often your first opportunity to really communicate with your client, to manage their expectations. From a risk management standpoint, we often talk about the importance of managing your client's expectations. If there's a gap between what your client is expecting and what you're providing, even if what you're providing meets or exceeds the standard of care, you're going to have an unhappy client. So this is where that all starts. This is the initial conversations, communication, and opportunity to manage their expectations. And the degree of that, of course, will depend on, who your client is, how sophisticated they are. If they're an unsophisticated client and they're expecting perfection, this is a good time to head that off. So in your professional service agreement, the parties can state their goals and expectations that they have of each other and of third parties. Answering questions like, when will the project be completed? When will I get paid? What information is the owner providing to me? Do I have the right to rely on the information the owner is providing? All of that should be laid out. A good professional service agreement will allocate the rights and responsibilities and the risks and the rewards. How much liability do I have? Is there some way to limit my liability, perhaps to the amount of my insurance that's available, or perhaps to direct damages versus consequential damages? How much am I getting paid? Can I publicize that I'm working on this project? All of that should be addressed in your professional service agreement. Written agreements can also help parties deal with future changes. So even though it may not be possible to determine exactly what those changes might be, it's usually possible to establish a process and some procedures for dealing with change. Contracts for design and construction are really unique contracts in that they are going to change. We know that, and so there has to be some mechanism in the contract that will allow for change orders, change directives, value engineering, changes in what are additional services. All of that needs to be addressed as well. Contracts are also very helpful in preventing disputes and can establish a framework for the fair resolution of those that do occur. All good professional service agreements should discuss, if there is a dispute, how are we going to resolve it? What type of alternative dispute resolution, whether it typically would be starting with negotiation, moving on to mediation, then a decision has to be made about arbitration or litigation. Maybe some dollar amounts are going to set that is going to influence that. Are you going to agree to waive a trial by jury or not? Who's going to be the initial arbiter of disputes? Is it going to be the design professional, or perhaps bring in a dispute review board early on to help manage disputes as the project goes along? If it's a large enough project, you might want to do that. It's really important that when you receive a professional service agreement from your client, that you review it in great detail and you know what's in it. Remember that 62% of claims against design professionals are made by the project owner. And this is your opportunity to manage that client, really. I remember recently reading a really interesting claim involving a State Department of Transportation that made an $800,000 claim against a civil engineer alleging an unsafe guardrail design. This is a fairly typical kind of claim that we might see. What wasn't so typical is that the claim became impossible to settle because the engineer's contract with the DOT required that the DOT manager act as the arbitrator on any claim. So despite appeals to the court upheld the agreement stating that the engineer knew that the provision was in there when he signed the contract. This claim ended up settling for the engineer's policy limits, despite the engineer's defense that the DOT assumed full responsibility when it changed the engineer's design to a less expensive one. So know what's in your contract. I thought it might be interesting to just kind of show this chart that shows what type of contracts are used or have been used in the claims that we've handled over the past 10 years. Interestingly, the majority, about 70% of them, are either insured drafted or what we call the standard form agreements, the AIA or the EJCDC documents. But I did really want to point out on this particular slide is the use of 10% or 10.3% to be exact of oral agreements. That is way too high. As we like to say, an oral agreement isn't worth the paper it's written on. It is almost useless when it comes to helping you resolve a dispute because there's no signed commitment to what's in that agreement. It's like not having an agreement. So it's really important to execute contracts prior to the beginning of performance of providing professional services. The second best practice that we're going to address is that your written agreement with your client should also contain specified payment terms, including a schedule of when payments are to be paid to you, which you should consistently follow and enforce, or at least document your attempts to do so. Keep in mind that any unclear or unspecific payment terms and untimely billing and collection of amounts commonly triggers claims and counterclaims. If your client isn't paying you and you've submitted a few invoices, you need to really find out why they're not paying you. Is it because they're having some kind of financial difficulties, or is it perhaps because they're just not happy with the services that you're providing? And if that is the case, it's better to know that sooner than later so that you can try to help resolve whatever the disputes are. You don't want to be an ostrich and put your head in the sand and ignore potential disputes because they're just going to get worse as time goes on. One of the basic tenets, of course, of having fees in your contract is to make sure that your fees are adequate for the services to be provided. You don't want your fees to be so low that you can't provide adequate services to meet your professional standard of care. Or if your fees are too low, you might be tempted to cut corners because you're just not getting enough money to really adequately spend the time that you should be on that project, and that can result in claims. As an architect or an engineering firm, you extend credit to your clients from the time the services are rendered until the service-related fees and expenses are paid. And this aspect of your professional practice is really fraught with a lot of risk. So what can you do to try to minimize that risk? First of all, I would suggest checking the financial capability and payment practices of prospective clients before you agree to perform professional services. You want to make sure that they're going to be able to pay you and that they have enough money to finish the project. As we keep saying, insist on a written agreement with clear payment terms and conditions, including the right to suspend or terminate your services for non-payment. Make sure your billings are timely, accurate, and consistent with the contract. Actively communicate with your clients so there are no surprises to either party, and follow the applicable provisions of the contract when clients don't make timely payments. I think if you follow those, that will go a long way. Interprofessional agreements, these are really important and can get some firms into trouble. This has to deal with when prime consultants retain subconsultants on their projects. As you probably are all aware, design professionals have what's known as vicarious liability for the negligence of subconsultants. Therefore, when you select your subconsultants, it's imperative to determine if they have the capacity to take on a new project that you might be retaining them for. Are they available? Are they so busy right now that perhaps they can't assign the right staff to it or allocate the right amount of time? You want to make sure that they have the time to do it and that they have a decent reputation and that they're good at what you're hiring them to do. Frequently when I handle claims, I would find, especially with architecture firms that would typically hire a lot of engineering subconsultants, if they hired the wrong subconsultant, a structural or a mechanical, on one project, they may have hired that same firm for many, many projects, and that just resulted in many, many different claims. So, you want to make sure that your subconsultants have a good reputation and that they're compatible with your firm. And that can be in everything from technology issues to just your philosophies and your more ethics and how you handle projects and how you handle your clients. And there's got to be that typical kind of compatibility that goes along with it. And most importantly, probably, is to make sure that your subconsultants are adequately insured or at least have the financial capability to stand behind any disputes or claims that they may create. It is really important that your written agreements are all coordinated and don't have any uncoordinated or mismatched expectations. One of the greatest difficulties that we often see with prime designers is if you retain a subconsultant, and they're presenting you with their own agreement, and it may not be coordinated with the prime designer's agreement with their client. That can create all sorts of inconsistencies, and inconsistencies end up in being disputes, and nobody makes a lot of money on it except for the attorneys, really. Some of the typical things that we see are, the biggest one is perhaps if your subconsultant wants to limit their liability to you to a certain amount or to only direct damages versus consequential damages. It's not awful for them to want to limit their liability to you, but you should not be accepting that limitation as the prime designer unless you have a corresponding limitation of liability in your agreement with the client. Because, for example, what can happen is, let's say you have a subconsultant who limits their liability to the prime designer to $50,000, and then is negligent in some design aspect of what they've been hired to do, and they create damages of $200,000. Well, your client is going to look to you for the $200,000 because the prime is the person that has the contract with the client, right? In an ideal world, as the prime designer, you should be able to turn around to the subconsultant and say, this was your negligence, the damages are $200,000, you need to pay it. But if they've contractually limited their liability to you to $50,000, and they're in a jurisdiction that upholds limitations of liability provisions, they may be limited to only giving you $50,000, and then guess who's going to pay the additional $150,000? You don't want to be put in that position. There also needs to be coordination between the subconsulting agreements and the prime agreements in terms of things like ownership of the documents. If you, for whatever reason, have agreed to allow your client to have ownership of your documents, maybe even the copyright of your documents, but you didn't get a corresponding right from your subconsultants, that's going to create problems for you. Dispute resolution. If you've agreed to litigate with your client, but your subconsultant agreement calls for arbitration, you could potentially find yourself in having to be in two different forums. You might have to arbitrate and then litigate. You don't want to do that. That costs extra money and takes extra time. So our recommendation is, if you do use the standard form agreement, such as the AIA documents or the EJCDC documents, they publish families of coordinated documents. And typically they require that the consultant provide services to the prime in the same manner and to the same extent as the prime professional is bound to the client in the prime agreement. This avoids a lot of conflicts and is really important to have those coordinated agreements. As important, if not more important, is to require certificates of insurance from your subconsultants. You want to, as I said, confirm their financial responsibility and compliance with the contract terms. And it's also important not just to ask for professional liability, but also to be sure that they carry adequate general liability insurance coverage. And we often get asked, like, why is general liability so important? And sometimes it just comes down to the fact that when either professional liability or general liability is unavailable or inadequate, plaintiff attorneys will typically assert legal theories that they hope will comport to that coverage that is available. And because as an insurance company, our obligation to defend is broader than the obligation to indemnify, a lot of money can be spent before the issues and coverages are sorted out. And this is especially problematic on the professional liability side because of deductible obligations and depleting limits. We don't really want to be spending your deductible money or your policy limits and reducing them just to sort out what are the allegations and which policies are going to cover them. So it's important to recognize that inadequate or non-existent general liability coverage can erode the limits available under the professional liability policy. So be sure to follow up for certificates of insurance and ask for both of those coverages. And then it's also important to remember to ask for them annually. Because of the nature of claims-made professional liability insurance, especially, just because your subconsultants have insurance in place at the time that you retain them is, of course, no guarantee that they are going to have insurance in place 3 to 4 or 5 years after the project is completed, which may be when the claim comes in against you. So you want to make sure that they not only have insurance in place when you retain them, but that there's an obligation in the contract for them to continue to renew that insurance for whatever number of years you and the client subconsultant agree to in the contract. And then you need to follow up annually for those certificates of insurance to make sure that they actually are complying and buying additional insurance.
Thank you, Judy.
Right.
Before I take over and talk about pre-project planning, let me mention that if I were a subconsultant, I would also want to see the prime's certificate of insurance. In many cases, situations, an owner will say that they want to be a third-party beneficiary of contracts between the prime and the sub. That gives them a strong right to go straight after the sub. And if that prime, for some reason, doesn't have adequate insurance coverage or drops coverage or somehow impairs the coverage, that sub could be the target. So what we're really talking about in this situation is really not only a contractual obligation between these parties, but a sharing of information between these parties. Okay, let's move on to pre-project planning. It's something that I think many of you probably don't do in a formal way. This is really the definition of it. And the idea of pre-project planning is to reduce the risk, the downstream risks, by reducing uncertainty on a project. Uncertainty leads to delays and costs and performance problems and disputes. And many owners know they need to spend money up front to increase the likelihood of a favorable project outcome. And that money up front could benefit them significantly in terms of cost. Now, many understand this, some will ignore this reality. But from your standpoint, it's also a way for you to show added value to the owner. Owners look at projects as investments. They are putting a capital asset in place, and you are helping them. Often they don't come to you with a fully vetted program, however. They may have an idea of what they want, but they may not have had an AE, some advisor, some contractor to help them understand all the pros and cons and risks that that specific project might entail. So pre-project planning helps owners. It can, by involving you, it can show that you add value, and it probably helps the contractor too, who may be a participant early on in this process. So it's an opportunity as well as being a good risk management practice. To give you some more information about it, these are really the parts of the pre-project planning process. We're not talking about a casual discussion with the client. You and your client really should engage in a structured, documented pre-planning process that results in a project definition document or package that substantially addresses these project parameters. You know, the project objectives, the business objectives, economic, aesthetic, or other. The project constraints, you know, the budget, the limitations on the budget, the schedule, regulatory constraints, or any others that could have an impact on that project. The basis for design and investigation before the project goes forward, you know, the site, data, and requirements, the utilities, facility programming and requirements, equipment or technology requirements, and increasing sophistication in the equipment and technology, and all those other alternatives that have to be considered that really should be looked at before the project gets started. The project execution approach, of course, you know, the whole staging of the project, the procurement strategy throughout the project, even the delivery method. You know, we are now seeing more and more owners who say, well, we're going to fast track this. The economy is picking up and we need to do this. It takes a lot more pre-project planning to use a method like fast tracking to everyone's advantage. And of course, you know, coming up with the project monitoring and control systems, you know, looking at the quality as the project's being built, the cost, schedule constraints, and how the schedule might be busted, and many of those other requirements that happen during the project monitoring control phase. Now, there certainly are significant benefits in pre-project planning. One of the sources we went to when we were developing this as part of the criteria is the Construction Industry Institute. It and others have clearly demonstrated the following benefits of pre-project planning. You know, the better definition of risk, so you know what all the parties are getting into. That helps prevent the surprises downstream that often leads to, that would lead to claims. Again, reducing uncertainty, increasing the predictability of the cost and of the schedule, you know, meeting that schedule requirement. You know, the better achievement of business goals, certainly for the client, that's what the client cares about when they're putting a capital asset in place, but also, we hope, yours and the contractors. Improved operational performance, both during the construction of the project and after. And again, fewer changes and disputes. The fewer changes there are on a project, the less likely it is that there will be a dispute that will take up time and money and drag you into a claim situation. Now, you know, both the AIA and EJCDC documents have long attempted to address the need to define the project and the environment for the project by including provisions in their standard client design professional contract forms that require the contract to provide full information. You know, the program, a schedule, a budget, a survey, geotechnical report, and other necessary information before proceeding. In addition, both the AIA and the EJCDC documents state that the design professional should respond to that initial information provided and advise the client of apparent conflicts, or the need for additional information in consultant services. This best happens in this pre-project planning stage. So rather than jumping into a project, if you can get the owner to sit down with you, to look at these, to better define the risks and all the other parameters that will affect the project, the greater the likelihood that that project is going to be constructed properly, designed properly, to constructed properly, and turned over to the owner properly. Again, speed in delivery can create major problems and claims, so the more you can do in a pre-project planning, really the better off the project will be and you will be. Let's go on to peer review. Now, we think of this as more of a formal process, but I think a lot of firms have been doing this for years. Peer review is really focused on looking at the likelihood that your services will satisfy your client's objectives, looking at that contract, looking at what kind of services you're providing, and really determining the key elements of your service and the deliverables, the instruments of your service, to see if they're in conformance with good professional practice. This has been a basic part of what many structural engineers do. There's standard peer review contracts that structural engineers enter into so they can have someone else examine what they're doing. They found that that was a great way to minimize their long-term risk. Small design firms often do this on an informal basis by having a colleague switch with them on projects and examine what they've done, and they'll examine what the colleague has done on the colleague's project, so that they can kind of catch any problems that might be apparent in the document. Now, again, it's one of the best ways for you to reduce exposure to claims because it can minimize client dissatisfaction. You're having someone else who understands what you do, look at what you're doing to see if you're meeting the client's requirements. It can anticipate problems. Now, you can say that, well, I'm using BIM, and BIM really is my peer review because I can use class detection and the other aspects of BIM. That's fine, and someday maybe artificial intelligence will perform the peer review for you, but it's good to have another firm involved as well. And it can help you control the quality of your design documentation. The client wants that, the contractor wants that. The contractor may seem to you to be someone who relies on the Sparrow doctrine and goes after delays and extra claims any chance they can get, but a good contractor will understand that the more design documentation there is up front, the faster and smoother that project can go, the more the profit can be for everyone involved. Now, a peer review needs to be some documented review of your professional services and deliverables, contemporaneously documented. So you know at that point what might be missing, what might be inadequate, what might be deficient. And if you look at the peer review process, a lot of firms say, yes, we do that. We have someone internally look at it. But often that someone internally is the person who's already responsible for the services or the documents being reviewed. It may be a project manager, it may be someone else on the project team. That's not the best way to have an internal peer review. If you're having an internal peer review, it needs to be done by a qualified professional, qualified appropriate to that specific design or that deliverable. And the scope of that review should be clearly defined, so it's not just a, yeah, I looked at it, but it should be carried out in a systematic and logical process, and ideally throughout the design process, not just at a stage where you're producing deliverables. Carried out as the conceptual schematic phase and the final design phase would be most helpful. And when you get those review comments and your responses to them and any agreed to solution, you document that. Now, you have to be careful in how you document something like that because we have seen files where design firms have said in their documentation, okay, that may not be the best solution, but let's go with it anyway because of time constraints or whatever. That's not what a claim specialist wants to find in your files if a claim occurs. Right? You have to document it contemporaneously, objectively, and clearly in your files. Now, different from a peer review, and I think increasingly demanded by sophisticated owners, is a constructability review. Clients are increasingly demanding that the design team engage with representatives of the project owner, a contractor, or other advisor, if the contractor hasn't been selected, who understands the construction process. And that could be contractors, CM, construction consultants, engaged by the client to advise on constructability. And occasionally other stakeholders are going to be involved as well. Because the more you can get input early on, the better off you are. Those surprises don't occur later on. If you look at early integrated project delivery documents, AIA, for instance, published something called the A295 General Conditions for what's called a transitional integrated project delivery process. With it, it's a B195. And the whole idea of that was to get a contractor on board early on, and that contractor selected by the owner early on could then be involved during the design process. And that really makes it difficult for the contractor later to claim that something is unbuildable or too costly or something that needs to be changed during the construction process. So a constructability review can really be a scheduled value engineering early on. Value engineering often has a bad rap to it, and if it's done early on in the process during the design stage, it can add real value. It reduces the possibility of second guessing that often happens after the design is completed and someone says, let's value engineer that to get some cost out of it. So if you're doing a constructability review early, it's really a value engineering that identifies possible problems, and that really precludes claims for delays and extras later on. The contractor really ends up having to commit to certain performance goals early on because they're involved at that stage. And it also can help in that it documents that the owner has approved something. Remember, everything you do as a design professional is a recommendation to the owner. And you have to get the owner to accept that recommendation and sign off on it. So having a constructability review up front gets that owner involved early and gets that owner's acceptance of your recommendations earlier. The best input on a lot of projects comes from trade contractors and suppliers, people who actually build the project. So having some input early on from those parties can be helpful. The opportunities to influence the cost, the schedule, even the quality diminish during the course of design. And, again, that input is most effective if it's early in the planning and design process. As you can imagine, if there's low bid procurement strategies, they work at across purposes to a timely constructability input. So unless the owner has a constructability consultant who's working with you, if the contractor isn't selected ahead of time, that can be a problem. Now, what can it do? It can reduce costs. It can reduce upfront costs, which makes the project go more smoothly, makes the owner happier with their commitment to the capital asset. It can reduce or at least help to keep the project on schedule, reducing the time for the construction and those delays that can cause problems for everyone involved. And it can even, from a contractor standpoint, improve the safety of the contractor's field operations, because in many cases, contractors will say, wait a minute, doing it this way is going to be a problem. We're going to have safety problems, And if you look at the new AIA documents, there are situations where a contractor can say that, can say, wait a minute, I'm not going to go forward with this unless I get more information, unless this is changed, because I wasn't involved early on. I can be involved in redoing this, and then I can go forward and take the risks of going forward. Now, submittal management. Again, submittal management has always been a problem. I've been in practice for decades now, and I think one of the first things I did after school in architecture is go to a program, a conference on shop drawings and submittals that said back then in the 80s that it would solve the problem of shop drawings. Those problems have not been solved. We are seeing some changes, mostly because of BIM. BIM integration might actually change the very need for shop drawings because that's going to be wound into the model early on. But submittals can still cause a problem, especially shop drawings. We're seeing more and more design professionals reduce the number of shop drawings they require. And part of that is just saying, we do not want to be your quality control person, contractor. If you bid on this and you said you can do it, do it. And we will look at the results of that. But submittals and shop drawings are a communications tool. And they are still part of the entire construction process. So to manage that process, you really need to have a process in place that tracks the as planned and actual submittal date. That really reduces your exposure to contractor delay claims. And it really helps the document's compliance with the contractual mandate that the contractor submits the submittal schedule along with the construction schedule. And that you don't approve the construction schedule, that's for your information, but approving the submittal schedule helps you plan how you can interact during this process. You know when you're going to be asked to look at something. So, again, as part of that, you're going to track it. You're going to have some kind of log or spreadsheet that tracks when it was supposed to come to you, when it actually came to you, what the response date is that's reasonable, that's set up by the contract, and what action you took on it. This is what EJCDC and AIA documents say. They're pretty uniform in how they treat submittal management. They require that the contractor provide a schedule and that schedule incorporates time for review, so you don't get a bunch of shop drawings on a Friday with a note from the contractor that says if they're not ready on Monday, it's going to delay the project. You have to have it scheduled in advance. You have to have enough time to adequately deal with it. And, the requirement that you approve the submittal schedule is there so your planning purposes are met, so you know what your staffing requirements are going to be. And, again, that needs to be prepared with the construction schedule. So submittals are made in a logical sequence and in a manner that sets the time for them so that the contractor can proceed with construction based on those submittals. Now, contractors often complain that, well, I can't really give you a submittal schedule at this time because I haven't bought out the job yet. That really is a bogus argument. The contractor committed in the contract for the construction to provide, coordinate, and supervise the work. And as part of that, if the contractor can agree, can make a commitment to a completion date and can furnish a construction schedule, it should be able to provide a submittal schedule that allows for proper submittal review and approval. Now, Judy, we talked about what these risk mitigation techniques are. Would you like to talk about the insurance aspect of it and how they can benefit not only from a risk management aspect, but from savings on their insurance and their deductibles?
I always like to talk about the good news part of this. So one of the rewards for engaging in best practices, I mean, in addition to, as we talked about, trying to avoid claims or making claims more defensible or helping your firm's profitability, is that you also can see some monetary rewards through your insurance. And one of the ways is what we refer to as the risk mitigation credit. This actually has replaced in our policy the mediation credit that many of you probably remember. The mediation credit was originally created to encourage the use of what was at the time a less familiar method of alternative dispute resolution. Firms weren't familiar with mediation, they were reluctant to use it, so we created a mediation credit which encouraged its use, and it did a very good job. By 2005, it had served its purpose with more than 75% of claims being resolved through mediation. And so we realized that that mechanism served its purpose. Now it was time to come up with a new mechanism, and we wanted one that would reward our insureds for their risk management efforts. And similar to the mediation credit, the risk mitigation credit, or what I'll refer to as the RMC, because it's easier, is also voluntary. Nobody's going to force you into doing it. But if you're a firm that's already employing these various risk management best practices, you may as well benefit from them. So what this is for eligible policyholders, it provides a deductible credit up to $25,000. And when we say eligible policyholders, that is because firms that have more than $25 million in billings are not eligible for this particular credit. And you must apply for the credit and supply the supporting documentation within 60 days of receipt of the application. So what happens is when you have a claim, the CNA claims rep will ask if you are interested in applying for the RMC. And if you are, they will give you an application. And we've been told by CNA that the RMC is now used in more than 50% of the claims, so that's great news. And that the biggest issue with the RMC is firms not complying in a timely manner. So please remember that the application has to be returned and submitted within 60 days. You complete the application, you provide some supporting documentation as to these various risk management practices, and then you would be eligible for the credit. So of course, what are the requirements of this application? It starts with having a written contract in place prior to the performance of the professional services. Oops. Sorry, I'm having trouble changing the slide. There we go. Okay. So the baseline requirement is a professional service agreement in place before the services that led to the claim, leading to the claim was, that doesn't make any sense, but having a professional service in place for the services that led to the claim. And then after you've got the professional service agreement in place, you have to meet 3 of the following 6 conditions. And these are payment terms and invoicing procedures in your contract, interprofessional agreements with your subconsultants, including requirement for certificates of insurance, pre-project planning with your client, peer review, constructability review, or submittal management process. Do these look familiar? These are the ones that we just talked about. Again, though, remember that the RMC will not apply to any claim resulting from services rendered prior to the execution of a written agreement. What we're trying to do here is really reduce that 10% that we saw on the chart for oral agreements or no agreements at all. It's really important to have that agreement in place, and that's why we're kind of pushing that on this. Now, we recognize, excuse me, that the risk mitigation credit is most applicable to risk-intensive projects and services, those that are typically associated with project design and construction. And so since some firms were not able to take advantage of the RMC because of the nature of their projects or their services, would not perhaps afford them the opportunity to implement the minimum number of best practices required, we went ahead and also created a risk mitigation credit, for example, for surveyors, which is, again, available to policyholders with deductibles up to $25,000. It's not for firms that have more than $25 million in annual billings. And again, you must apply for the credit and provide the supporting documentation within 60 days of receipt of the application. And what we've done for the for surveyors is it's got the same baseline requirement of having professional services agreement in place before the services leading to the claim were performed. And then they have to meet 3 of the following 5 conditions. And you'll see that 3 of these conditions are the same as those for other firms: payment terms, interprofessional agreements, and pre-project planning. But we've gone ahead and added 2 additional criteria specifically for surveyors. And one of those is professional services and accuracy standards. These address the need to manage client expectations. They help reduce the risk of claims by encouraging the parties to establish expectations for the services to be provided. For example, ALTA and the ACSM standards were developed to minimize the differences in expectations between the parties regarding what services are to be provided and the acceptable accuracy standards for those services. So, for example, a surveyor could then prove that they've met this criteria by providing documentation that their agreement incorporates current ALTA or ACSM survey standards that are executed prior to the performance of their services. We've also added criteria regarding quality assurance and quality control. Quality assurance are procedures established for a firm to monitor its quality standards, and quality control is the system itself that a firm establishes to maintain a level of quality for professional services. They increase the likelihood that services and deliverables will meet the standard of care and client expectations. It's important to plan for quality from the start, as Frank talked about, and this includes appropriate staff assignments, communication and documentation procedures, the appropriate use of technology, and allowing adequate time for review. So again, if you could provide proof of that, you would be entitled to the risk mitigation credit. Now, we are also frequently asked that, okay, the risk mitigation credit is great if I have a claim, but what if my risk management best practices were so good that we didn't have claims, and we still feel that we should be entitled to some sort of recognition for that, and you are through our underwriting processes. Now, again, this is separated out by size of firm. So for firms under $5 million in billings, if you can document that you have a special emphasis on loss prevention activities, and you've got a loss ratio of less than 80% over the past 10 years, you would be entitled to a 4% credit. And what the underwriters look for that are, are you using the standard form agreements of the AIA or the EJCDC? Are there in-house quality control programs? Is peer review being used? Is there some kind of an in-house program for continuing education? And I'll explain in a moment how Schinnerer can help you with that in-house program for continuing education. And then if you're a firm that's got more than $5 million in billings, there's no specific credit amount, but the underwriting review considers the firm's risk management practices as part of the overall consideration and pricing. And also look for things like written quality management, business plans, policies for following applicable industry standards, peer review, attendance at risk management seminars, or having in-house risk management education programs, and of course requiring that all of your sub-consultants have appropriate levels of insurance and following up for those certificates of insurance. I wanted to have an opportunity to show you, if I could. Sorry, again having trouble. Thank you. So this is the landing site of our new Schinnerer School of Risk Management website. This is contains a lot of the information that we had previously on the risk management website and then some, and we think we've better organized it to make it easier. And under the continuing your education, we can provide continuing education units for our education programs now, and we even have curriculum that's designed for specific positions and job titles within your firm. So there's a curriculum for associates, there's a curriculum for project managers, program managers, office managers, etc. You will need to establish an account if you haven't already done so. But once you register, you can look at our claim studies, our management advisories. We have a lot of contract language and commentary on that. And again, you can review our past webinars now for continuing education credits and much more. So I want to again thank you for attending, and I'm going to turn it over to Frank now to kind of wrap things up.